All right, just a quick review. First, we'll just take a look at the SPY. So SPY daily, you have, oh boy, there's a lot of volume here. And then about 70 million, then another 70 million, then I think 90 million, and then 60 million. So this 90 million had no follow through. And then you have about 60 million shares. So it's against this breakdown area, which I find interesting because there should be a pullback. There should be a reaction. Now, someone may say, okay, this is a one-day reaction right here, right? But I don't really see that as too much of a pullback. So over here is where I'm looking for something more significant. And I'm looking at the lower time frame, and right now, well, I don't really see much. There is, I mean, it's not there yet. Right? You see the volume is diminishing. So the force of the buying may be diminishing, but we'll see. It's not there yet, though. Right. Besides that, let's move on to oil. Oil, the force of the buying is diminishing. You can check right here from this wave to the next wave to the next high to the next high. What do you see? Down, 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 down. Why is this important? And I'll explain this now on how this thing works, how the markets work. All right, so this is factual information. It has nothing to do specifically with technical analysis. You will find this in every economics book, every anytime you go to school, everybody's seen this. All right, and that is the real law of supply and demand. Wyckoff talks about law of supply and demand as, demand greater than supply, price goes up. Supply greater than demand, price goes down. But the real law of supply and demand from an economic standpoint is let me draw this. All right, so if you look at any chart, right, you'll see that, I mean, any where they talk about supply and demand in economics, we'll do this as price, and typically they have Q for quantity, right? But quantity is just amount or volume, like, I'm just translating it. In the books, it'll be quantity and price, but quantity, as you know, is volume. So they say, then they have two curves, so one for supply and one for demand. Now, what do you know when what happens to demand as price increases? As price increases, demand goes down. Right? Everyone knows this because things are more expensive. The demand for them decreases. So right now, prices of almost everything have increased because of inflation. So the demand will drop off. That's just, why would you pay more when you could pay less? So what happens is price increases, demand goes down. So we call this demand. Now, what about supply? Supply, on the other hand, price increases, supply goes up. Why? Because you're getting a better price. Do you want to sell something at $5 when you can sell it at 10? No. So what happens? Supply goes up. Now, okay, now I'm going to connect this to the wave volume. The beautiful thing about wave volume is actually shows this. It shows this fundamental law of supply and demand. Well, I don't know any other, I'm not really sure if any other volume can show this, but wave volume can. I'm not sure profiles. Profiles show accumulation, distribution, or where the value is and all that. But the law of supply and demand, it can be viewed in wave volume. So in general, as price is going up, and now I'm going to show you this chart. All right. Let's just say this is the trend, all right? Oh, God, I fucked up. 1 second. All right, let's see. This is price, right? It's trending, which is, it's essentially going up. right? So the up waves, we will say that that's demand. Okay, we'll say the up wave is demand. All right. So this is your wave volume indicator. In general, again and again and again, repeatedly, you will see that as a trend continues to go higher, wave volume, the demand waves, the supply waves are on the downside, right? So these are the demand waves. I'm only drawing the volume, the wave volume that's connected to the rallies. Okay, those are demand waves. What's happening? They decrease. This right here is saying as price goes up, right, which is indicated by the trend, saying as price goes up, demand goes down. And this is the same thing that every economics book has about this line, this downward sloping line called demand. As price increases, as you can see by the x-axis, price goes to, let's say, 5, and then goes to 10, right? Price will go to 7, I'll put 1. Right? As price is increasing from 1 to 5 to 7 to 10, the demand line here, and what I'll do is, there you go, there's your demand, right? And this will be your supply. So you know which ones are supply, which one's a supply and which is demand. The green is demand. So demand is going down as price is going up. Here you have price going up, and what's happening to demand? Decreasing. So in essence, what wave volume does, which is unbelievable, like it actually captures the law of supply and demand. The law of supply and demand is captured by wave volume. Okay, now there are times when all of this happens and you get this decrease, and all of a sudden you have let me do the red one. You have a lot of volume. So what is this? This is your climax, which the wave volume identifies. Okay? And you may also have this, let me show you. You have two situations that occur. After this occurs, you basically, what you'll have is, let me try to draw your supply. That's one situation, and that will represent your, maybe a correction or a change of behavior. So it could be correction or change of behavior, and now you're on your way down. Or it can also be you can have this, right, which can be your climax. This basically, one of the two is going to happen, and you'll see this happen all the time, right? So you have a climax or your correction or change of behavior. Now I'm going to show you that in the market right now, right? So what do you think is going on here with oil, with this volume? 1, 2, 3, 4. Do you think that's bullish? Do you think that means that demand is increasing? Do you think the buyers are still there? Do you think they want to buy? Nope. Look at this. Demand is decreasing. So basically, as I explained, you're going to have two situations. One is going to be climactic action, and two is going to be a change of behavior, and maybe both will occur. All right, so basically, after demand decreases the way I've just shown you with the arrow going down, you have one of the two situations occur, or possibly both, which is either a climax, a change of behavior, or both, a climax and a change of behavior. And that's what's going to happen. You'll see. You're going to see. Watch on Tuesday. Okay, the next one here. This is also climactic, right? But I don't really see the downward sloping volume here yet. I don't see it yet. So I'd like to see that first and foremost. But I mean, obviously this is climactic, but you know, I like to see the downtrending. All right, so I'll show another example of here's TLT. All right, it is not. This is like a little bit difficult, but obviously you could tell that this is climactic, right? Like, there's no brainer that this is climactic, right? You see, because how you know this? You know because smart money does not buy highs. So when you have this situation, you have to ask, what the hell's going on? Right? So something's going on up here. Now, the only thing I don't like is that I want to see from high to high to high to high volume decreasing, because that is telling me for sure that demand is gradually tapering off, which is the law of supply and demand. Right? So you want to see that. So I'll give another example. Look at gold. 1, 2, 3, 4. Demand is decreasing. So now I'll just wait for a climax or change of behavior and see the turn and determine whether to sell it or not. Right? So this is the situation. You know, sometimes it's, I mean, even on the downside, you see like after this, it just, it's not as apparent here, right? Because I mean it's there, but it's not like 100% apparent. It's actually this. I can't really. I don't. Oh shit. Anyway, but it has to decrease, and it did decrease, but it's not enough. I wouldn't have too much confidence in. I think it's this. This, it's not very clear, but here it shortens and the volume tips off, and then you have your change of behavior. Here it's going to be very clear. So here you have your bullish change of behavior after volume diminished, but here I think it's going to be more clear because you have, 1, 2, 3, 4 waves. So you have to understand the tools you're using, and what the beauty of wave volume and the effectiveness is that it actually captures the law of supply and demand, the real law of supply and demand from an economic point of view, from a supply and demand 101 point of view, the foundation of all markets, whether trading or not trading. I mean, universally, can be identified using wave volume. So that is a huge edge. If you just have some common sense and apply it, you'll see that what happens after in an uptrend when the volume diminishes is you're going to get a climax or a change of behavior or both. Then what happens? Trend reversal. Why? Because at higher prices, supply come in, and then it's going to price will continue to go down until demand comes in. So that's how the market's rotating. All right, so that's what I wanted to give today. When you get a chance, try out wave volume. But the mistake that there's a couple of mistakes that people make. One major mistake is they only look for a change of behavior, like, or a climax. They only look for that. They don't see the development of everything that takes place, and then the change of behavior occurs, or then the sign of weakness occurs, or then the sign of strength occurs, or then the climax occurs. They're negating from their eyesight, they just don't pay attention to it. And they just want to see a big volume spike. So that's the first mistake. You have to see how volume is developing to the point, not just volume in isolation. So that's the first mistake. Second is automatically assuming a change of behavior, because the price is going down and you see a big wave. Okay, this is a change of behavior. So it could be short covering. It could be because it's testing an untested level, and there were buyers there. It could be it's typically one of those two. It's usually short covering a support or like a support level, or some buyers that that were there on the pullback and it goes to a support level and they start buying. So assuming that that's a change of behavior is an error. It could also be that and when that occurs, it could also be that it's just going to come back and test a breakout or a breakdown and then continue in the direction that it's supposed to or is currently trending. So that's what you need to see. So the tip is, when you're looking at, let's say, a daily chart and a 30-minute chart, look at the wave volume on the 30-minute chart, whatever lower time frame, and see how it's developing. Once you see how it's developing, you will anticipate the emergence of a sign of weakness or a change of behavior, and then you'll have a lot of confidence to take it, because you'll see that as it happens, you know exactly what to expect. Climax or change of behavior or both, and you're ready to pull the trigger. All right, that's all, folks. Bye.